Hi, I'm Linda Eedes. This is an update on the RECM Equity Fund, looking specifically at the fourth quarter of 2017. So the fund was up 2.7% during the fourth quarter of the year, which I think is not a bad result, despite the fact that the all-share index was actually up over 7%. That's largely driven by Naspers' spectacular rise, which has continued to defy gravity. It's up 70% for the year, in fact, and that makes up sort of over half, in fact, 2/3 of the 20% that the all-shares delivered over the course of the year. But I think as value managers, we're not benchmark-oriented, and as a result of that, in comparison to many managers who had significant exposure to Steinhoff, our investors didn't fare too badly during the fourth quarter, despite the fact that because we're not benchmark oriented, we also don't have much exposure. In fact, we have zero exposure to Naspers. We only ever invest where we see absolute value, where things are trading substantially below what we think the intrinsic value of the business is worth, and that's irrespective of how big a part of the benchmark that company is. So for better or worse, we haven't held Naspers, but we do believe that we offer quite a compelling proposition within the context of a diversified portfolio for that reason, for the reason that we are prepared to be quite different to the index. And I think, for the first time in a while, perhaps investors started to think a little bit more about that, with Steinhoff having been at the forefront of everyone's minds. I think it just is a reminder that, bad things happen, unexpected things happen, and that there's probably no company in the world where one can be assured that nothing will ever go wrong. So all in all, if you look at the year's performance for the fund, it was up just sort of over 3%, about 3.5%, I think, after fees for the year. But if you actually look at the 2 years since the start of the value cycle, the fund has actually performed phenomenally well, despite Naspers and its impact on the all-share index. So if you actually take it back to the start of 2016, which is when things started turning kind of in favor of value-oriented portfolios, the RECM Equity Fund is actually up more than 60%. And if you compare that to the all-share index, it's almost double. So the all-share index is up sort of around 33% for the same time period. So I think that's a very good result, and it's something that we think will continue going forward. The market environment is changing, and we're seeing sort of the domestic side of the portfolio, which had been under a lot of pressure, the more sort of South Africa incorporated type businesses, which have been a little bit more cyclical in nature, which have been impacted quite significantly over the last few years, are starting to now sort of come through a little bit with the rand having strengthened so significantly. We're also starting to see a few opportunities in businesses which are sort of more global or multinational, if you like, such as Mediclinic, which has obviously been under pressure for quite some time. We started taking a small position in the fourth quarter of last year, and I think that's sort of a theme that you'll probably see emerging slowly, is with the rand being so strong. I mean, it's strengthened by 30% since the beginning of 2016. The impact of that will be that some of the businesses which are sort of more global in nature might actually start to look a little bit more appealing in terms of sort of the overall valuations of the businesses. But certainly the theme still remains a very strong kind of focus on sort of more domestic mini industrial businesses locally. We did in fact though sell out of Richemont, which obviously is more of a global type business. That obviously had done incredibly well. It sort of peaked at the beginning of the quarter, and we sold the last little bit of our holdings at that point in time. But with a lot of volatility in the market, one of the benefits of being a value manager that's sort of often not caught up in sort of the major story of the day is that it gives us a little bit of time to reflect on what's going on and actually sort of deploy some capital into the market where value is emerging. So in fact, we actually increased our equity allocation during the quarter. It actually sort of went up, and the portfolio has now got quite a small position in cash left over. It's about 5% of the overall portfolio. So the equity fund, we believe, is very comfortably positioned. I think with sort of quite a lot of high sort of at the overall market level risk. That's something that investors can avoid by having a portion of their portfolio with RECM. We do tend to do quite well when there's sort of an overall market fall, and that certainly was the case with everything that went on in the fourth quarter of last year with the Steinhoff issues. And we think that we positioned very, very comfortably for a continuation of the value cycle in our favor.